Hey guys, this is big. Elon Musk just put a 43 billion offer to buy Twitter. It's a huge deal and created a lot of noise in the market. In this video, we are going to be discussing about this deal and analyze how it's going to impact the shareholders of both Tesla and Twitter. Elon Musk at the moment owns 9% of the stake in Twitter, which makes him one of the biggest shareholders in the company. And since he recently rejected the offer to be on the board of Twitter, he can take over the company if he wants, if he buys enough shares from the secondary market. The takeover in that case is going to be called a hostile takeover. Hostile takeover basically means that although company's board doesn't want to sell the company at the moment, acquirer has enough shares to still be able to take it over. Let's pause here, analyze this deal, and we'll come back on this. If you still haven't subscribed to the channel, please do so because we will be talking about a lot more interesting things in the future. Let's analyze the deal now. Now, at the time of announcement, Tesla stock was trading at 1022. It has around 1.03 billion shares outstanding, making its market cap equal to around 1.053 trillion. Whereas Twitter stock was trading at around 45. With around 763.58 million shares outstanding, its market cap is around 35 billion. Now Musk put an offer of 43 billion, giving a premium of around 9 to 8 billion over Twitter current valuations. Considering the current shares outstanding of Twitter of around 763 million, premium per share is around 9 to 10 dollars, making its implied price equal to around 55-56. Now, Twitter is currently trading at $46, which means it can still go 20% higher if we believe Elon Musk's valuation. But don't buy it yet until you watch the end of the video. Now, if Elon Musk is paying 10 billion over the current valuation of Twitter, it means he must be getting a benefit of more than 10 billion. Otherwise, why would he even pay a premium, right? Let's see one equation. If the deal goes through, Twitter becomes a part of Tesla, right? The value of integrated company is equal to value of Tesla pre-acquisition plus value of Twitter pre-acquisition plus any synergy minus the amount paid. Now, we know the market value of Tesla pre-acquisition. We know the market value of Twitter pre-acquisition. We know the amount he's paying. But what is synergy? Synergy is basically the benefit he would be getting from owning Twitter. Now, we can assume a synergy of around 12 billion. Basically, we can play with this number. Now, if he is overpaying 10 billion from the valuation, it has to be more than 10 billion. So let's try to be conservative and just assume a number 12 billion. So now, what would be the value of integrated company? If I put the numbers, 1.053 trillion pre-acquisition value of Tesla plus 35 billion pre-acquisition value of Twitter plus 12 billion of synergy, you can play with this number, minus 43 billion is going to be equal to 1.057 trillion. Now, with the number of shares of 1.03 billion outstanding in the market, per share value of the company would be equal to 1026. Tesla is currently trading at $985. It dropped 4% from the day of announcement. 4% drop means it wiped off 40 billion from the Tesla's valuation in a day. Basically, the price currently reflects Tesla's takeover of Twitter and assuming somehow a negative synergy, which is understandable because the businesses are totally different. But even if we assume zero synergy and I put the numbers in the equation that I just showed you, we would still have the value of integrated company at 1.045 trillion, making the stock price equal to 1014. At 985 current price of Tesla, Tesla is trading definitely at a discount. Let's talk a bit about the synergy for a moment. Though we know the businesses are different, we have seen wide movement in the stocks whenever Musk comes on the platform. Twitter is quickly becoming an open medium for raising voices and opinions. And we have seen social media impact on the volatility of stock market in recent days. If Elon Musk is able to monetize the platform, somehow this deal could turn out to be a very good deal eventually leading to high synergy. Twitter, however, has adopted the poison pill strategy to stop the takeover. It means Twitter will flood the market with more shares if Musk tries to buy more shares for acquisition. Flooding shares is going to dilute Musk's ownership in the company, making it hard for him to take it over. This could certainly impact the prices of Twitter shares negatively, as flooding more shares in the market is going to decrease the earnings per share, leading to decrease in the price. And that's the reason why Twitter price didn't go up that much on the day of announcement. So don't jump and buy Twitter as of yet, as it could go ugly. Do your own analysis, and if you think the deal will go through or Musk would pay more than 43 billion for Twitter, then Twitter is a good buy at 45. But again, do your own analysis before purchasing. We'll keep monitoring the story closely, and I'll see you in the next one.